Hello, everyone. Welcome to a quick update. My name is Jack Watts. I'm Head of Economic Strategy at AHDB. And with me today is Helen Plant, Senior Analyst in our arable team. We're just doing a short video just to talk about a little bit about what is happening in the grain market at the moment. Massive volatility going on, and about some recent data from the USDA. So, Helen, what's happening with prices first of all, I suppose?
We've had some rises coming through, particularly when you think back to early March, late February. We're probably about 45 pounds per tonne ahead of where we were at that point. And yeah, that's really come into the market. It's a bit of a turnaround from where it was at that point.
Yeah, it's been quite remarkable, hasn't it? So it's kind of the price charts are telling us we're sort of the highest new crop futures price since, I think, last February, so over a year. Yeah. I think we're probably thinking there, and I think I guess that's the key thing, is that this is a new crop issue dragging prices higher. Mm-hmm. What's going on? What's the drivers going on there, do you think?
Yeah, so I think initially some of it was about concerns about over European production, and then we had things coming in about less than ideal conditions for wheat in parts of the United States. And while that's still going on, the big sort of focus for markets at the moment is Russian weather conditions, and particularly looking at winter wheat here. And it's been much drier than ideal in parts of southern Russia. And more recently, then we've had reports of overnight frosts as well, and how that's could be impacting crops. And with Russia being such a big player in the markets, production, export wise, any threat to their crop levels is quite an important issue for the markets to pay attention to.
Yeah, I think it's fair to say that markets do not like weather issues or quickly, particularly this time of year, Northern Hemisphere crops coming out of dormancy into the main growing season. And markets particularly don't like Russian weather stories because, as you say, big producer exporter, and kind of harking back to the memories of 2010, we had that big Russian drought and then export ban, which really just set the market off. And I guess part of the challenge is the market being able to access reliable information out of Russia as well and understand quite what's going on. And that kind of, I guess, segues into our sort of the big bit of data that we've had out. So we had the USDA monthly report out last week, which gave us the first estimates of what harvest 24 is going to look like around the world. So what are the highlights there?
Sure. So I suppose the key takeaway for wheat is really the wheat crop, and we've expected to fall short of demand in 2024, which would pull wheat stocks down again. Early stocks to use ratios, so looking at how much stock is available compared to demand amongst the major exporting nations, puts us back at sort of levels not seen since 2007-8. It does come with a caveat. We have sort of seen that before in the last couple of years, a couple of times, but it's definitely a mark of nervousness for the markets now. And quite well, it was more than markets were expecting. So that added to the price rises we then saw on Friday night and potentially seeing this morning as well.
Yeah, so it's a classic tightening up of supply and demand expectations. And I think it really is quite entertaining wheat stocks around the world, because depending on which way the market's going, commentators can kind of talk the story either way. So it's kind of one of the things that infuriates me is that when the markets are falling, everyone's talking about the high level of global wheat stock, absolute wheat stocks pushing markets down. I've got three major problems with that, I think. One is that absolute stock levels don't really tell us much about how well stocked the market is, because it's all about how much stock have we got relative to the size of the demand. And so because demand's increasing every year, you need more absolute stocks to give you that coverage. And the other bit is looking at it at the global level, because looking at headline global stocks is really quite misleading, because you look at just on paper, and you stress on paper just how much stock is in China, and we know that actually that stock is largely unavailable to the rest of the world, and that leads to the third point. We've actually got to understand what's happening in the main exporting regions, whether that's Europe, whether that's Russia, whether that's North America as well. And that's we can't look at it. And I guess when we look at the fund activity, perhaps we're seeing an over simple interpretation of some of the basic supply and demand fundamentals, because as I understand it, the funds have been quite short, have been selling markets.
Yeah, they have, and that's probably one of the contributors to the fall in prices through the first few months of 2024. And they built some really quite considerable shorts in wheat especially, but also in maize as well. These are in the Chicago futures markets. And I mean, the latest data only takes us up to last Tuesday, but there's been quite a sharp buyback of those positions now, reducing those short positions around, and that's a trend that you can only expect continued in the latter part of the week. And it does raise the question about where now then to where things go from here on in.
Yeah, and I guess that's the big question, isn't it? I guess we'd come through a winter of very bearish markets, heavy supplies of old crop, but as soon as the markets become about new crop, the weather caveats have started to kick in. But where do we go from here? What's the what would be your advice to anyone with an interest in the market going forward? Not when to sell or when to buy, but how to look at this market, how to read this market.
From what we've seen before, it is a hard time of year to read things, and because there is so much going on and so many crops in their crucial development stages at the moment, or coming up to those development stages shortly. How do we read it? We look at this as something that is very much a changing picture. It's one that you need to keep a closer eye on, but at the same time, one day's price movements can be quite different from the next because it does change with changing weather reports. So it's looking at it, but it's trying to look at a few days at a time as well to not miss anything, but not get hung up on just one day's price movements.
Yeah, so from a farmer selling point of view, it's a case of it's a welcome increase in prices for any unsold crop. But don't get too complacent with it, because we know that we're still quite early on in the growing season. A bit of rain in a dry place may well start to improve crop prospects. Yeah,
and it can quite quickly calm nerves as well. We've seen that before in the past, that worries can build or ease quite quickly if the weather turns in your favour.
Yeah, so I think the key message there is to stay in touch with the markets. And I think often looking, when we see these big price increases, understanding, well, if the market was to turn lower, what would be my selling points, almost my stop loss be? That's one way of thinking about it to help sort of manage that downside and manage the psychology. Is just one of the very many approaches that people can think about.
There are so many options for people, but it all comes back to the basics of sort of knowing what your costing structure is looking like at the moment. What do you need from anything coming forward, and where what can you do then to if this is a profitable price, then it's worth considering. So
yeah. No, absolutely. No, I think the key thing is to stay in touch with what's going on in the marketplaces. AHDB's got lots of resources there to help people stay in touch, not least the Grain Market Daily, really useful quick fire resource. So I think we'll leave it there. Thank you very much, Helen, and thanks everyone for watching.